Are the setups in place for a stock market correction? We'll kick off this week's video by looking at the current readings of the CCM market model. We'll check in on weekly momentum, something we haven't seen on the chart of the S&P 500 in a while, weekly trends, and risk on versus risk off. To view the video in full screen mode, use this icon in the lower right-hand corner of your video player. To improve the clarity of the charts, use this icon in the lower right-hand corner of your video player. This is the Master CCM market model. We use this as a guide based on our risk tolerance and goals and objectives. Yours may vary. The recommended exposure a week ago on Friday the 17th by the model was 87% on the risk side of the equation and 13% on the conservative side. A week later, that mix is 55 and 45. This is a summary table from one of the sub-models, the CCM correlation model, that feeds into the master market model. This gives us some idea of the magnitude of the changes that took place from a technical and observable perspective over the last week. This model follows these charts and literally asks thousands of questions about observable evidence. Profile here, roughly it's telling you that a week ago, 80% of the questions, and they're weighted differently, but for illustrative purposes, 80% of the questions a week ago for the S&P 500 were returning bullish responses. A week later, that number is down to a concerning 14%. These are the core charts here in terms of importance. S&P 500, long versus short, stocks versus bonds, the NASDAQ, and the broader NYSE composite. And you can see the change between the 17th and the 24th is significant. For the remainder of the video, we'll show you examples of those observable changes that the model tracks. This is a weekly chart of the NASDAQ. Those of you that watch our videos on a regular basis, you know that one of the things we track is momentum here, measured by Williams percent R. When momentum is in overbought territory, the probability of good things happening increases, and when it drops out of overbought territory, the probability of bad things happening in the NASDAQ increases. Drops out, after that, bad things happen. Drops out, after that, bad things happen. We think in probabilities, and that's the way we work, meaning the model does not predict the future. You can see as of the close on Friday, January 24th, we have momentum dropping out and closing out of overbought territory for the first time since mid-2013. This is an observable change, and until it improves, it will check negative boxes in the CCM market model. The CCM market model tracks numerous moving averages on multiple time frames, on multiple indices, and using multiple risk-on, risk-off ratios. We often show common moving averages such as the 50-day and the 200-day, but the model uses a lot more than common moving averages. This is the daily chart of the S&P 500 index as of the close on Friday, January 24th, and you can see from the October low that we bought here, those of you that are clients, or if you follow along on Twitter, you remember that we scaled in as the observable evidence improved here. During the entire rally, the S&P 500 never closed below the 50-day moving average. You can see that we did today, and we made a lower low. Break of a trend line, lower low here, lower low here. This is starting to look like a downtrend potentially. We've got a close below the 50-day moving average. It appears as if it's flattening out. If it rolls over, that will also check additional negative boxes in the CCM market model. Regular viewers know that we use moving averages and weekly charts, daily charts, and monthly charts The moving averages help us discern between volatility to ignore, and volatility to respect. This is a weekly chart of the S&P 500 index. A full bore bullish look where the probabilities are in our favor are when price is above the blue and the red moving averages. Blue is above red and the slopes of both are up. A full bore bearish, or the probabilities are now against us look, is the mirror image of this. Price below both moving averages, blue below red, and the slopes of both are down. The market model begins to check negative boxes. Is price above blue? The answer was yes here. Now it's no. Is blue above red? The answer was yes here. Now it's no. The model and or this chart don't predict anything about what will happen next week. We don't know how long it will look like this. When the evidence improves, and it may happen next week, if it does, we're happy to scale back in towards a more risk-oriented and growth-oriented allocation. The model also tracks several indicators on every chart. One example here would be the Copic curve. The question it asks, is the slope of the Copic curve positive? The answer here was yes. Now the answer is no. The market model uses and tracks and asks questions about numerous risk-on versus risk-off ratios. This is one example. This is the weekly chart of the S&P 500 relative to the AGG ETF, or the aggregate bond fund. This is what I'd rather be in stocks looks like when the ratio is rising and we have a full bore bullish look, price above both moving averages, blue above red, and the slopes are up. We have now moved to that mirror image look. All the answers to the questions here are yes, and as of the close on Friday, January 24th, they are now no, and hence checking bearish boxes in the CCM market model. Now this looks like I would rather be in bonds. As long as it continues to have this look, we will respect it. How long will it last? We don't know. You remember in October when the look and the evidence improved, we increased our exposure to risk assets. We'll go into next week with an open mind. If we head in this direction, we'll continue to scale away from stocks and scale towards more conservative assets such as bonds. If it flips and risk on rules the day, we'll be flexible and adjust. No bias, no predictions. You can see momentum works in a similar manner for ratios. Good things tend to happen when you're in overbought territory, and the probability of bad things happening increases when you drop out. You can see momentum here is weaker than it's been at any time since last summer. How do we track all of this and convert it into a usable and actionable format in a reasonable amount of time? The submodels, we answer binary questions, some of them manually done, some of them programmed in Excel, and we also enter in unbiased and hard data. The submodels allow us to get a handle on the market's current profile, and the master CCM market model then looks at the current profile, compares it to past profiles, and recommends a prudent allocation between risk assets such as stocks and conservative assets such as bonds. Conservative assets can consist of cash, bonds, currencies, or any number of investment options. If you'd like to learn more about the market model or our money management services, you can visit our website, follow along on Twitter, Facebook, read our blog short takes, or watch past videos on the Shavaco Capital channel on YouTube. As always, it's important that we head into next week with maximum flexibility. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or offer to buy or sell any security or any related financial instruments, nor should any of the content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shervaco Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.